I've been investing in oil wells for the last 30 years, and I've got a tremendous amount of wisdom and insights to this business that I teach investors. Two of the major reasons why investors invest in oil and gas is number one, the monthly income, and number two, the tax benefits. When you invest into an oil well, you're buying what's called working interest, and you're paying for a portion of the cost of what it costs to drill a well. And in return, you get a percentage based upon your investment. And the oil that's produced from that well is sold to the local refineries, and the refineries sends you a check every time they purchase oil based upon your proportionate share. And so the income could last for the next 30 to 40 years, potentially however long the oil well lasts. The number two benefit is the tax benefits. You get what's called IDCs, Intangible Drilling Costs. Those tax benefits come from the cost of developing the well and other experiences, no different than if you own a business, you get many tax benefits to your business expenses. And so you get a write-off anywhere from 65 to 90% the first year, depending upon your tax situation. So if you invest this year, come next year, you'll be able to write those tax benefits off for the year that you invested. The tax benefits alone brings a tremendous amount of capital to this business from high net worth investors and high income investors strictly for those tax benefits. And so it's important to pick the right operator. An operator is the one that actually drills wells. They have the leases. They have a geologist that determines whether it's a good place to drill or not. And so it's important to find an operator that has already made a field discovery. Otherwise, you're investing in what's called wildcats. It's no different than being the first sucker to cross the ice, finding out if you fall through or not. You don't want to use your capital to explore oil, exploratory wells. Those are very high risk, and the likelihood of success is 10%, very low. And there's 90% of the deals out there are exploratory, and I don't care what they call them, PUDs, offsets. They're high-risk deals. Stay away from those deals. If you are an investor, you're not an oil company, you're not a geologist, you're not in the business, stay away from those deals. And so in 2007, I made the transition from trying to be that guy looking for oil to looking for operators that have already found oil. And so there's many operators right now that are in a bind because banks don't finance. Banks have gone woke. Banks don't finance oil deals anymore. And so operators opening up the door for an amazing opportunity for guys like you and me. And so the operator makes an oil field discovery, but he doesn't have the capital it takes to drill even more wells. And so now he has a low risk opportunity, but no capital. And so that's where I come in. I bring on investors like yourself. If you're watching this, you come to me and I bring you the deal that I've already done diligence on. For instance, I have a geologist that was one of the top geologists for two multi-billion-dollar oil companies, one of them being Marathon. He overlooks the geology, making sure that it's in line with what they're saying. Okay. And so it's no different than buying a car and the salesman says it's a great car. Well, why is it a great car? I mean, the salesman didn't build the car. The salesman didn't maintain the car. The salesman wasn't the previous owner of the car. He knows absolutely nothing about the car, and you're supposed to trust that what he's saying is true. Okay. And so that's why it's important to get a mechanic to look under the hood to see if there's any issues, to make sure it's mechanically sound car. Well, no different. You need a geologist to look deep into the log reports to know if this operator is worth a snuff or not. In 2007, I built algorithms. I started focusing on LinkedIn. I have over 6,000 followers on LinkedIn in the oil business alone. And these guys send me oil deals. And so I look at all these oil deals and I find the low-hanging fruit versus spending millions of dollars trying to find oil. I let them take the risk, and then I take those oil deals to my investors, okay? And that's how it works. So the deals that I send, they've already gone through a tremendous amount of diligence, and they're as low risk as possible. I mean, every investment has its risk, but this reduces the risk substantially, okay? And so I also talk to investors every day. I have investors email me, text me, call me, and reach out to me continuously. And one of the things I always ask them, have you ever invested in oil and gas? And how was your experience? If they say it was a great experience, I want to know who they had a good experience with. I want to know who they had a bad experience with. And then all that data I take down, and it gives me even more wisdom moving forward. Okay. So, all right, guys, if you're interested in learning more about oil well investing, if you go in my description below or go in the comment section below, you'll find a link. Fill out my form, and I will get in touch with you. We're currently developing across the U.S., and I have many great oil projects. My main focus right now is in a 40-well lease in New York, and I could teach you more about that deal. All right, guys, I'm Sean Pruitt, president of Kingdom Exploration. Please subscribe to my channel, and we'll talk soon. Thanks.